Yeah, there's a slight miss on the gross margin. I think that is going to get a lot more questions. In our preview, we talked about the three key areas people were looking at. One is that sort of circular financing angle that Ed really laid out very clearly. Second was this gross margin. Remember, Nvidia has announced price increases. That implies that they need to increase their price to protect that 75% gross margin. They only came in tad bit below, but it will be interesting how the outlook looks when the Vera Rubin ramp starts fully in the fourth fiscal quarter. So that is something we're going to pay very close attention to.
Kunjan, I got to ask you, their shares have kind of been on this wild ride, right? They sink in the winter. In the spring, they kind of bounce back. In the summer, it's been kind of a little bit all over the place. They coming off a 7-day losing streak as well. So we look at Nvidia, it's up about 14% in 2026. It's a decent showing, a little bit of far cry from past performance. What can you say about, is that all concerns about the AI trade? Is that simply exactly what it was, or is there more to the story?
No, it's simply that is, look, Nvidia is the overall AI trade right now, right? So that's what the concerns are. And right now, I think we are in that bubble gap timing-wise this quarter and next quarter, where everyone's trying to figure out what happens in 28. And until you don't get the clarity that this AI wave continues or accelerates in 28, people are trying to sort of stay on the sidelines.
Ed, what is up with gross margins? That bottom line figure there?
Yeah, I mean, I'm reading back over it. I'll just recount it. So in the quarter gone, adjusted gross margins were 75%, bang in line with expectations. For the fiscal third, the guide is 74% plus or minus 50 basis points. I think consensus was 74.8% on the adjusted gross margin. Kunjan just said that Nvidia has announced price increases. Maybe he knows something I don't, but all I'll do is say that Bloomberg had reported that the server makers were informing customers that starting in January 2027, that any system shipped from that point, both Blackwell and Vera Rubin, would be subject to higher prices of 15% or more. And so right now, the environment is hard right now. Memory pricing, we've talked about the supplier commitment expanding, but I don't get a sense that there's an explanation of what the impact on margin was contemporaneously, right? I don't see that in the release. So, on the call, maybe there'll be just some discussion of that. What are the real-time impacts of higher memory? What are the real-time impacts of fighting for fab capacity? We just don't have answers there.
Hey, Kunjan, we're getting questions from people around the world right now who are tuning into this. This one's from pretty close to home, actually. Geary in Edison, New Jersey. This is actually about what Ed was just talking about, sending a question to us about Nvidia informing its customers that the prices of servers with its chip are going up by 15%. Ed, that's what you were just speaking about, right?
Yeah.
Okay.
Yeah. That was a Bloomberg report last week, or I can't remember. Yeah.
Okay, so Geary asks, and I'll pose this question to both of you. I'll start with you, Kunjan. What percentage of it is directly going to its top line, and how much is going to DRAM producers, Micron, Samsung, and the like, and what percent is going to server manufacturers? So curious, they're just curious about who the beneficiaries of this is. Is it CoreWeave? Is it Nebius? Is it Dell? Or is it the Samsungs and Microns of the world?
Yeah, from what it seems like, the company has not publicly discussed, but our estimate would be it's all going to offset the rise in memory prices. Remember, Nvidia purchases the memory from the memory suppliers and has a pass-through model. So in order for it to protect its margin, when the cost of its input, which is memory and wafers from TSMC as well, that has also increased in prices, it needs to raise its prices. So most of this is going for that input rise from wafer, so to TSMC, and the rest to the memory makers.
Yeah, do you have anything to add to Geary's question about this sort of, again, not just this, we don't get this information from the company, but just based on your reporting, and you report on a lot of the neo cloud providers as well as the DRAM producers.
The way that I would put it, and I kind of throw it back as a question to Kunjan if I can, is just remember how the world works. So if you are a neo cloud or a hyperscaler, or you're a large software company that has their own sort of data center on-prem, you don't walk into Santa Clara and say, "Hi, Jensen, can I have 100 of those?" It's not how it works. There are companies like Dell, HPE, Supermicro that assemble the servers, and historically and traditionally, they are also the sales channel, right? And so our reporting was based on the idea that those server makers told Nvidia customers prices are going up. Nvidia owns more of the content of the server design, but I'm trying to understand where and when this price hike gets initiated. Do you see what I mean, Kunjan?
I do. And again, like the flow through of the whole BOM, starting from foundry, adding memory, Nvidia chips, and the work that the OEMs, the Dells put in. So this is going to flow through everywhere. And it's coming from the front end of the supply chain. So rising input wafer cost has to be passed through from the chip maker. Rising memory prices has to be eaten by the chip maker, which then in turn is increasing prices, which forces or necessitates the Dells and OEMs to increase their prices as well, unless some party within the supply chain decides to eat that cost.